Be Wealthy and Smart, episode 1347.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, will the Fed cut interest rates at all? Because that's been the speculation over the last 5 to 6 months. Will the Fed cut rates? Won't they? At the end of last year, believe it or not, there were almost 6 interest rate cuts expected and priced into the market. And the decline of interest rates anticipating all those cuts caused the market to take off on a tear. And we've had 4 straight months of the market going up this year with a pullback in April and a strong start in May. In fact, the Dow Jones Industrial Average has risen for 5 days in a row and marked its longest winning streak since December. This is coming off of last week's momentum after the U.S. jobs data numbers alleviated concerns that the economy was too hot and let us know that not as many people got jobs as was expected. And that allowed Chairman Powell to rule out an interest rate hike as their next move. So the market's moving interest rates up and down in anticipation of what the Fed is going to do. And since inflation has remained stubbornly high, but now on this barbell, one side has come in much weaker, this jobs number, now there's more hope that perhaps the Fed can cut 2 to 3 times before the end of the year. We still have the Magnificent Seven leading the way, and they seem to have pretty good earnings in general, which has led the market higher. And the other 493 stocks in the S&P 500 are stabilizing and showing some early signs of improvement. And that's what we need, is for those companies to have stronger earnings, and that's what's going to drive prices higher. Now, there's an old Wall Street adage that says, sell in May and go away. That is until they come back in October. However, when the S&P 500 starts May in an uptrend, such as it has this year, stocks have historically produced above average performance at least through July. And the opposite is true. If May had begun in a downtrend, then it would have been a downtrend through July. Now, when we look at the inflation number, what's causing inflation are basically 2 things. Rents have remained about 6% higher, and auto insurance has been rising at a 21% rate. Now, obviously, auto insurance can't continue to rise at that rate for very long, but it has had a big jump recently. And that's what is keeping the inflation number higher and stickier. So should rents and auto insurance start to pull back, that will definitely help the inflation number. And with the jobs side of the equation already being weaker, we might just get our first interest rate cut. And it looks like the market is pricing that in to a July time horizon. The other thing that we need to be reminded about is this is an election year, and you tend to get a lot of strength in the summer of an election year. So historically, stocks tend to perform well during the summer months. And we may get the interest rate cuts, as I said, 1 in July, and then maybe 1 or 2 prior to the election. I think with that lower jobs report, it really is setting us up for more interest rate cuts than the market has priced in right now, because the consumer makes up 70% of the economy. So if people have lost their jobs and it's harder to get a job, which is what I'm hearing out there, that means less consumer spending, and that eventually is going to show up in the economy too. So once we get auto insurance and rents back in line, which they are falling into line, we should be in good shape to get some interest rate cuts. Many of these indicators have a lag time, and so you really don't get a current picture of where they are today. You're looking in the rearview mirror of a month or 2 ago, and sometimes a whole quarter. So it's hard to get that forward-looking view or the view of where we really are at this moment in time. And so sometimes it becomes painfully obvious that the economy is in need of a rate cut, but it's not usually something the Fed sees coming. It can be a last-minute statistic that shows up that they really didn't know was trending that way. So we'll see how this all turns out. But I would say the market is setting up for 2 to 3 rate cuts between July and the end of the year. And that would be good for business, good for car sales, good for home sales, and in general, good for the economy. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.